Hello everyone, and thank you for joining this weekly technical analysis video. The US and several major European markets are open today after a long weekend. We finally have an agreement on the debt ceiling front in the US, but the focus will turn back to the calendar this week since the US is publishing its popular non-farm payrolls report this Friday. Eurozone and Australia will be publishing CPI inflation readings, which might affect rate expectations in those regions. So that makes it interesting to watch what the technical outlook is for dollar yen, euro yen, and Aussie dollar. And starting first with dollar yen and US non-farm payrolls report. Well, forecasts suggest a slowdown below 200,000 for jobs for the US jobs growth. But investors might anticipate an upside surprise given that the previous releases have been beating expectations. So if that proves to be the case, if we get another upbeat employment report in the US, dollar yen may resume its recovery. Though for the bias to shift back to bullish, the price will need to close above this key resistance trend line around 141.50 and 142, a break of which could drive the price straight up to the 144 and 144.70 constraining zone, where the 61.8% Fibonacci retracement of this downtrend over here is also located. From a technical perspective, we can see that the market might be near overbought zone. The RSI and the stochastics are weakening a bit after touching their overbought levels, so we can't rule out a downside correction. If that proves to be the case, if this weakness persists, then the price may retest the 50% Fibonacci of 139.57 before heading towards the 20-day exponential moving average seen between 137.50 and 138. Slightly lower than that, some consolidation may emerge near the 38.2% Fibonacci of 136.65, while traders may get more upset if the price breaks this thin support trend line around 135.67. And now turning to euro yen, this is one of the euro pairs that had great performance recently. Unlike euro dollar, we can see that it's currently facing some weakness, and forecast for Eurozone CPI inflation is for a sizable decline. So it's for sizable slowdown. So if that proves to be the case, if Eurozone CPI inflation data come weaker than expected or in line with expectations, which could consequently make ECB less hawkish and reduce the odds for a rate hike, that could pressure euro yen probably back down to 150, a break of which could initially stabilize around this steep support trend line around 149.20. That is where the 20-day moving average is also located, while not far below that, the 23.6% Fibonacci of this bullish wave is also placed. So a decisive close below 148.58, which is the 23.6% Fibonacci, could trigger a sharper decline, likely down to the 38.2% Fibonacci of 146.70. Technically, though, we can see that the technical indicators over here are still within the bullish area, so the bias remains positive. Though for the price to resume its upward move, it will need to rise back above this key resistance trend line, which is keeping bullish actions under control, currently around 150.50. Close above that line could help the price to crawl back towards the May's 15-year high, 151.60, a break of which and a move beyond 152 could boost buying interest, likely up to the 153 and 153.30 constraining zone, where this long-term resistance trend line is located. And finally, turning to Aussie dollar, well, the Reserve Bank of Australia has been a bit confusing lately after deciding to pause its rate hike cycle. The RBA said that additional rate hikes might be possible in the coming months. So CPI inflation readings could be important to watch in Australia this week. Expectations are for a stable inflation, but if the readings surprise to the upside, that could help Aussie dollar to regain some ground. We might see, but for the bias to see more recovery here, the price will need to close above the 0.6565 barrier, that is the lower bound of the previous range area. So a close above that bar could help the price to crawl up to the 50% Fibonacci retracement of this uptrend over here at 0.6663. Then if bullish pressures persist, we might see another key battle around this tentative resistance trend line around 0.6735, and then slightly higher, a bullish break above 0.68, which is the 38.2% Fibonacci, could probably boost buying interest up to the 23.6% Fibonacci of 0.6923. Bullish actions cannot be ruled out since the RSI and the stochastics are trying to rebound near oversold levels. Nevertheless, the indicators haven't exited the bearish area, so downside corrections are still likely. If that proves to be the case, if the price weakens below 0.6525, then the 61.8% Fibonacci of 0.6483 could provide support as it did a few sessions ago. If not, if the weakness persists, then the price could tumble towards the 0.6370 and 0.6340 support zone, where these two key trend lines coming from 2021 are located. So that's all for today. Thank you for watching this technical analysis review. We will be back next week for our next technical analysis. See you next time.